chatting to you about capital gains tax, but I do have good news for you, and that is that I am not an accountant. I'm also not a tax consultant. So I'm an attorney, so luckily it's not going to be too technical and it's not going to be too laborious, but if you have any questions, please reach out to me. And I do have a joke for you about what accountants and attorneys have in common. Do you guys know? We're exceptionally good with billing. Okay. So I'm chatting to you about capital gains tax, and it's so relevant and it ties in nicely with what Michael had said, because it's part of life, right? And you need to take into account, if you're thinking of selling or buying property, what the tax implications are. So we know since October 2001, I don't know who bought before 2001 in the room. Nobody. We've got one or two hands. Okay, so we've got a few hands. So it's interesting that this was then seen as new legislation. So capital gains tax is part of income tax. So it's based on an annual basis, and it's essentially a tax on the sale of any assets. Now that's very important, because when you think of your capital gains tax obligations, it's triggered by the sale of property, but you need to also keep in mind your other transactions. So are you selling shares? Are you selling other properties? It could all add up. So guys, timing and planning, I think that's the focal point that I want to bring across tonight, is so important. So quickly, just a rundown of the numbers. So as an individual homeowner, you're going to pay marginally about 18%. Capital gains tax. For a company, 21.6%, and then we've got trusts at a whopping 36%. So it is a lot of money, guys, so that's why planning is so important. Capital loss can obviously be set off against any profit. So if you've made a capital loss on something else that you've sold, keep that in mind and convey that very important information to your attorney or your accountant. Okay. So tax compliance is now part of any property transfer. So if you're serious about selling property or buying property, you need to make sure that you've got an income tax registration number. Now you're going to sit there and think, but Madeleine, I've never done that before and I don't have to because I'm not earning an income in South Africa. Well, SARS changed the legislation last year in December. So now when we do a property transaction, we have to submit an income tax registration number for you. Whether you're local, not local, whether you're earning an income or not. Luckily, this is administrative, and it's something we can help you guys and we can assist you with. Okay, so please reach out to us, because what we're seeing lately is buyers demanding quick turnaround time. So if they want to take registration within 4 weeks, and if you want us to achieve that, we need to know that your tax registrations are in place. Second consideration, and the good news that I was referring to, is that on a positive note, government reviewed the primary residence deduction. So if you are selling your personal home, the exclusion is now 3 million. So you can imagine at 18% what a difference that million makes. Okay, so it's a huge saving to keep in mind. And if you're thinking of buying, it's also important. If you don't own any property in your name, do you want to make use of this advantage? I'm not saying it's always best to buy property in your individual name. It is important to talk to your attorney or your accountant to get advice, because there are other mechanisms that are important as well. Now, the primary residence deduction is not available if your property is owned by your company or your trust. Even though you might live there, it's not available. So that's really important. Then other deductions and exclusions that are important is for you as an individual. SARS also changed this. So in addition to your 3 million deduction, you also now have an additional 50,000 deduction. So that's 50,000 of your profit that you don't need to pay any taxes on. It used to be 40,000, so that's really great. And then they've also increased the death benefit, which is up to 440,000. So just a quick calculation, and I know Michael also mentioned the improvements and how important they are. They're also a very nice deduction from your capital gains and reduces your capital gains tax obligation. So essentially your capital gains is the proceeds of your sale, so it is your selling price minus your base cost, and there are certain deductions like your costs that you spent in acquiring the property, the attorney's fees, those transfer duties which are huge amounts, anything that you spent to acquire the property, as well as anything that you are spending to sell the property, like commission or, like I mentioned, improvements. So guys, on that point, I want to encourage you to take this brochure, and you're welcome also to take my business card with it and to come and visit me at our office. We've got a very nice app that you can download on your phone, and it has what we refer to as the Vault. Now, the Vault essentially is an encrypted cloud, so anything you upload is private. But if you're serious about selling property, then this is a really cool tool. So what you can do is you can look at all your old slips, invoices, receipts, anything that you spend on improving the property, take a simple photo and upload it as a PDF document onto the Vault. You can have all your paperwork sorted out, but by the time you sign your sale agreement, we have everything you need there to do your capital gains tax calculations for you. So that just makes the admin a lot easier, it helps you plan, and it helps you look for information that you need to, because sometimes you have to reach out to the guy that did your pool because you don't have the final invoice, or whatever you need to do to make sure we get all the paperwork ready for you. Okay, withholding tax, your budget, and your expectations. Now guys, this is really important if you are non-resident. The Income Tax Act actually requires the conveyancer to retain 7.5% of the selling price after transfer. Now, why this affects your budget and your expectations is because you are obviously planning to do something with that money. You want to buy another property, or you want to move the money overseas. And leaving 7.5% behind, or 10% if you have a company, or 15% if you've got a trust, is a lot of money. So what we do at STBV, with all your information already uploaded, we have our own tax guy that can get you a tax directive. And what that essentially means is we will be able to know exactly how much you owe in terms of your capital gains tax obligation. We will enable you to settle that amount on registration of transfer. To avoid this, because we don't want this money to sit with SARS for an entire year without earning any interest. And especially if you're thinking of buying or applying the money elsewhere, you don't want the money to be tied up in attorney's trust accounts or with SARS. And then my final tip is talk to your conveyancer. Again, please, I invite you, take our business cards, come and visit us. It's a free of charge consultation, and come and ask us what your questions are, because it's so important that you are prepared for your property transaction. So I always say conveyancing isn't the way, it's completely different to the way that we did it a few years ago. FICA compliance, guys, is at this moment a nightmare. So if you own your property in the name of a trust or company, come and visit us. We'll tell you what you need to do to ensure that you are FICA compliant. We'll also tell you what you need to do to make sure that you are tax compliant. Do you have your original deed? You don't. We can help you get that as well. If you've got a bond, we can help you avoid cancellation penalties. Now, my husband has a joke that he always makes to my girl's frustration, and that is failing to prepare is preparing to fail. And I think it rings true in all scenarios. So please come talk to us, let us be your partners, and help you prepare for your property transaction. Any questions, you're welcome to reach out to me afterwards, or to take my card if you want to rather enjoy the wine and chat to me on Monday. Perfect. Thanks so much, guys.
Thanks ever so much. You'll be pleased to know that the speech is over. But thanks, a huge thank you to STBV. They've got an amazing team here behind. They got a lot of information to give, so please use their knowledge. They're here and available. And then, yeah, as we say, massive thank you to all the wineries that are here. Please go and enjoy. Let us know what's your favourite, and we'll be joining you. Thank you very much indeed. Thank you.